Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, the 27th of May, 2025 at 6:20 p.m. Central Time. Psychology is what's at work in this market. And the market is changing right in front of you. President Trump fooled the markets a couple of times when he came out with tariffs and immediately changed what they were. In other words, one day he's putting them on, 145% on China. Next day, let's go to 50% tariffs. You understand what I'm saying? On just this past week, Friday morning, 6 in the morning, the president goes 50% tariffs on European Union. And by mid-afternoon, the president said, okay, those will be suspended until July 9th. But meanwhile, the damage is done as the market drops and comes back. I covered that in the market letter that I wrote today, showing the frequency that he's doing this. And it takes only several, and you have more than that, for the market to start saying, you know something? Maybe you buy those deep breaks when he says these things because he changes his position so fast. Now, there'll be a time when he doesn't change his position, but he's trying to get deals done right now. So I think the market has got his number. I could be wrong on that. We'll see what happens, but that's what I do think at this point in time as far as trade goes. Now, let me show you how the psychology of the market is working. Drop with me down here at the bottom first. Today, the U.S. consumer confidence shot up the most in 4 years after making a very close to a 5-year low just earlier this year. So the consumer lost all confidence. What suddenly changed? I think they have his number. Consumer expectations, they shot up by the most since 2011. And the cutoff on the survey, that's what I want to know, was the 19th. Half those people that responded did it on the 12th, way before this last, if you will, tariffs on Apple, tariffs on all other phone manufacturers outside of the United States that want to sell us phones, China, so on and so forth. I think the market's figuring it out. Mortgage Bankers Association comes out in the morning. Remember, you have some delays because of Memorial Day. Redbook Group is one of them. They'll come out with retail sales tomorrow at 7:55. The Richmond Fed will come out at 9 o'clock tomorrow with their manufacturing sector numbers. The API number will come out again tomorrow instead of tonight when they normally come out due to the Memorial Day. NVIDIA, after the close tomorrow, you're going to get their earnings, so you want to pay attention. That will be a market mover in the aftermarket on the stock market, so definitely want to pay attention. And CNBC, Jim Cramer is going to interview Jensen Huang, and we'll get an idea as to what he sees with what is going on. Fascinating market, but what do you have here? You have a market that dropped, found its footing, came back up. Let me show you a few things. First off, on the weekly chart, you haven't been able to close back under the 18-week moving average. It closes so far for 2.5 weeks or 2.33 weeks. We can call it that right now. When we look at the daily bar chart, you can see how the market bottomed out April 7th. Again, one of those panic moves came up. I want to go back to Friday. Panic move, came back up. Got the play here? You can pick out other ones of these in here, and if you go to those spikes, you will see what I'm talking about. You're still not up to the 62.36 level, which is the all-time high yet. Today, if you watch CNBC, Bloomberg, my God, there's so many people saying this is it, the market's going to run. Okay, I don't see a trend right here. As a pure technician, not one reading all that's there, I see a higher high and lower and low. I'm sorry, that is not a trend on a daily chart. I see a market that did exactly what I tell you here. The market broke back, found its support at the 200, the 100, and the 18-day average of closes. That's what it was supposed to do. Now it's bounced away. Okay. Even if you go right through these highs, right there, I'm not talking the highs, I'm talking this set. You have a pattern, you got to get something better than that. You can't have a higher high and lower low and tell me that you're trending per se. I can say the bias is up. That's definitive in here. It stays up unless you get back under and close under 50. Actually, it'd be 58, 30, 90. And if you got under 57, 56, 50, you'd actually have lower highs, lower lows. I'm not counting on that. I'm just giving you where the numbers are. In terms of Bollinger Bands, so far you haven't gotten back to an upper band in a while. So we'll see if the market's able to do that. That's often a target number for the market if it's going to extend a rally or a break, if it's going to fall back to it. So you always pay attention to that. And remember, markets only stay above or below Bollinger Bands 5% of the time. When I take a look at momentum, this is an overbought market. When you lost the bullish momentum on this chart, I want to walk you back here because it's important. The market here lost that momentum. The next support was the 100-week average, and if it did more, maybe the 18 even can get hit, and that's exactly what occurred. Watch this. And that's where the market held, and this is where you're at right now. I'm not going to do that on every one, but you can see you did the same thing when you lost the embedded reading into the NASDAQ. You went to the closest moving average, the 18-day. In the Dow, you did the identical thing when you lost that average. Now you're bouncing and you're back into resistance of the 100-day, the 200, and the upper Bollinger Band. And when we come to the Russell, you did the identical thing. So all that we were looking for, we didn't know if the markets would go down here, but we had a downtrend in terms of the swing line, upside bias as the market was over the average. It held it every time it tested it. It can get under it, but by the end of the days, it kept coming back, and you're just coming back at it. So I'm going to call this one of these type trades like that, not a trend trading, not in any manner whatsoever. When we look at the DAX, back up for the highs. Here, too, you lost the embedded reading. You tell me what you made your run at. If you don't believe it, that's fine. I do. When we look at the 10-year notes, take a look at this market in terms of the embedded reading. And did we have one? Watch. Both numbers under 20. Both numbers under 20. Both under 20. We're embedded. If you lose it by the red line closing over 21, I teach, by the way, my formula is not the one you have. So if you're trying to make yours do this, it won't be the same result. Closes over it, I'm looking for the 18-day average. Now, if you don't think that's worth something, fine, that's not your style of trade. To me, it's worth a lot because let's assume I wanted to get involved in a market. That's one way to look at it. Let's assume that I'm in the market wrong and I want to get out. It's warning me that this is what I could face in the marketplace. Doesn't mean it always works. Nothing always works but death and apparently taxes. You can take it the rest of your way, but that's what I think. On the 2-year, we have been saying here, I have been saying with you, hey, you're fighting a huge battle at the green line, the 100-day average. You lost the bearish embedded reading, but that was your target. Where do you go with that? I don't know. It's sort of stuck there. In the dollar index, overbought, now oversold. So I see a market that is caught between the upper band, the lower band, and just marching around in there. In the eurocurrency, I told clients now that you're overbought and you made your run to the upper Bollinger Band, time to go bye-bye, let somebody else own this for a short while, get away from the overbought condition. Doesn't mean you should come out, but I know what I told my clients today. British pound, overbought into the Bollinger Band. I'll let somebody else buy it over that band. It won't be me in terms of me telling my clients, you do that. Not going to happen. Then we get to Bitcoin. I'm still friendly. Until you lose this reading, this market can surprise you which way? To the upside. If it breaks down, we know what to expect. Another challenge potentially of the red line, the 18-day average of closes. When we look at energies, you tell me what the battleground is. You've heard me talk here for 10 minutes. Do I not teach you that the 18-day average is where things seem to come alive from? That's what you're on. Are we trending? No. Or is the chart trending? Is the right grammar? Higher high, lower low, and stuck right on that average. Never did embed, working off an overbought condition. I don't know what the next part of this market's going to be. By the way, there's a slight clue. Should I give it to you? I'm not going to. There's actually a clue on an outside day. For those of you that took the outside day course, look at it. Is that an outside day? No. All you had was a higher high, lower low. If it were, you'd have something to work with. Same thing here. You made the higher high, came back, played at the 18-day average, and you're just hanging in there. Gasoline. I think I said Sunday night when I did the updates, or over the weekend, be careful, the Memorial Day driving's over for the moment. Now we get into the normal summer drive, and this is the profit taking. Doesn't mean the move to the upside's necessarily over, but gasoline prices are under pressure, and that's where I think they'll stay. And the market that I'm still looking, I think it's going to end up bearish. I'm not telling you to go short yet, so don't write me and say, you told us to go short. It's not what I said. I see big resistance right here at that 18-day average. I need to see which way the market wants to come out of it. The current pattern is not conducive to a trade. You have lower highs, but you have higher lows. So you're narrowing in right into this number. Let's see where the market wants to play it from. A lot of this, other courses that we have, they're involved in our free offers. Now, you're not going to get my Bollinger Band course, my full trading course, or the courses that I have on outside days, but you will get pivot points. You're going to get the Aruna indicators. You're going to get booklets galore that explain stochastics, RSI, different chart patterns, what they are. You simply go in here in the free offers, and you click on the one that you want. It'll go into a card for you, put your name, email address, and we'll get everything out to you, probably within the next day or so. I'm Ira. You have yourself a great day. Go to iraepstein.com, free offers. I'll catch up with you on Wednesday.